look at another company which I personally own, and I know you cover it as well, is Stadio. How do you see Stadio going forward? What is your personal view on their future? So obviously they've done a lot of investments and they're now going into the growth phase, which they call it. And they took the past years to just get all the structures in place. And with education, it's investments in the beginning and then the margins increase. But, what's your take on Stadio?
Yeah, I've been covering the education sector for nearly 30 years. And I first got involved with Curro Holdings when PSG bought their 50% stake, the 50 million rand, probably 15 years ago, where I met the founder of Curro, Dr. Chris van der Merwe, and he was telling me about his schooling strategy, both in the primary, secondary, and tertiary space. And that business rolled on for many years. And then in 2018, Curro unbundled Stadio, so it had two distinct entities. So you as a shareholder got one Stadio for every one Curro share that you owned. So you could decide, do you want to be in primary and secondary education, or do you want to be in tertiary? Now, in my perspective, I've gone on public record, and there'll be an article coming out in the Financial Mail at the end of this month, where I actually rank and give indications as to my personal view on private education. I've actually got a copy sitting right here, right now. I'm looking at it right now. So I know what my numbers and my valuations and my ranking are. And for many years, my ranking has been number 1, Advotech, number 2, Stadio, number 3, Curro, because Curro's earnings have materially disappointed for a number of years. Stadio, as you correctly say, has been in a growth phase, and Advotech, having spent the money over decades building up a network of schools and tertiary educations, is basically a cash cow printing money. But all that's going to change going forward as the varying growth vectors in the other companies start to change. So my ranking schedule is going to change to number 1, Curro, number 2, Stadio, number 3, Advotech. Not that Advotech is a bad company, but I'm here to make money for my institutional clients. And in the medium term, I see greater capital appreciation potential in Curro, which I think are trading right now at about 9.60 rand, 9.80 than I do in buying Advotech, because I can see Curro probably increasing in value by between 60 and 70% in the next 12 to 18 months. And I cannot see the same capital upside in Advotech, despite the fact it is doing fantastically well. When I first recommended Advotech last year, it was trading at 11.85. It is currently 18 rand. When I had a sell on Curro last year, 10 rand, it's now 9.60 to 9.80. So it's gone nowhere in a year. So it was the right call. Now, the one in the middle of a pack is Stadio. Now, if I only had to be in one education counter for a long-term portfolio, I would only want to own Stadio. And the answer to that is extremely simple. One, it is a capital light, capital generative business. What that basically means is, because it's an online educator, it doesn't need to put down classrooms and buildings and campuses, because once you build an initial campus, if you've got one lecturer sitting in a room doing an online presentation, that online presentation can be listened to by one person or 1,000. The fixed cost is the same. Yes, you have additional costs in terms of perhaps supervisors and other lecturers assisting learners online with tutorials or, let's be simplistic, homework questions or assignment queries. But the fixed cost of actually presenting to 1 or 1,000 is the same. If you're a schooling company, if you have 20 kids in the class and you suddenly get an influx, you have to build another classroom and provide another teacher. So the costs are much higher. So in Stadio's case, they're an asset-light business. So it's a clicks and asset-light business because it's mainly online. 88% of their students are online distance learners, and there are contact learners going to campuses. So the underlying cost structures of running a tertiary education in the Stadio model is significantly less than an Advotech model, which tends to be contact learners. You are going to a varsity college. You are going to a Rosebank. You are going to one of the colleges to actually be taught in a classroom. That costs money. Rates, taxes, electricity, lecturers, canteen staff, caretakers, cleaners, security. When an online situation, the costs are much, much lighter. Stadio is going to start hitting its J curve in the next 12 to 18 months, purely because the accreditation of online courses are beginning to happen. About a year ago, they were waiting for 36 courses in law, business science, education to be implemented. At the interim stage, they had 31. They're now at 29. So slowly, more courses are being accredited and being made available to the students to start learning. So their natural market is those learners who perhaps either are in employment or perhaps do not want to go to full-time contact education and want to learn at their own pace, at their own time, perhaps out of hours, or if they've got a job. Unisa is the single largest online education segment in this whole African continent. They have 350,000 learners. Stadio is the second largest at just around 38,000, showing you that there's a natural uplift for them to target Unisa clients. And as a state education system starts to fail, where they want more and more learners to go through the state facilities with an ever-decreasing pool of capital to meet a growing demand, the parents that can afford to send their children to a private education system that offers tertiary qualifications to the standard of a national university will, of course, pay, because it's supply and demand, it's capitalism. You know, as I was discussing with a client last week, you know, if you were spending money sending your child to UCT or to WITS or to NWU or TUX, where there's ongoing activism and libraries are burned down and they riot during exams, would you really want your child to go there? Surely you'd want something better for them. And as such, you have a choice now of going to a private tertiary-based situation, and you've got Stadio and Avitech, and they are naturally attracting learners. There were 14% more online learners at Stadio, like on like at the interim stage. So to me, currently Stadio's at about £3.71. They earned about 11-12 cents at the interim stage. It's still expensive in a PE, but they're in a rapid pace where, as more learners come into the system, the fixed costs have now been spent. Any additional bodies above and beyond the current base starts becoming pure profit. And this company has a 2026 target of 56,000 students and £500 million in learners for a total capital cost of around £3 billion. To put that in comparison, Curro will have learners of around 100,000 learners, also making about £500 million a year, and the total capital cost of getting there will be £14 billion, showing you that physical contact learning is very expensive. So to me, I want to be in I want to be in Stadio for the longer term because of its profitability, but I want to be in Curro for the shorter term, for the capital uplift as the earnings growth starts to now kick in after its significant capital development. So I own Curro, but I've also recently been adding to my Stadio holdings aggressively across my free pension funds.
Yeah, exactly. So Stadio's, the margins will be really healthy going forward. As you say, the fixed costs stay the same, but the potential upside with new learners and new courses go up significantly. It would be awesome to see a graph between Unisa's current growth and Stadio to be able to compare, you know, how much of the market share Stadio is actually taking from Unisa, because that's the main competitor.
Yeah, I'll give you one great example, which Stadio told me. I had a meeting with the CEO and the CFO of Stadio basically last week, as I checked my diary. It was last Thursday. I spent an hour and 15 minutes in their company. And they said to me that the single fastest education qualification in this country is education. People realize that in a very difficult environment, if they train to be a teacher, there's better chance of them entering some form of vocational work, either as a teacher or potentially even using that qualification to leverage themselves to go offshore, because everybody wants teachers. So they said inside Unisa, they have 350,000 learners, of which 110,000 learners are doing some form of education-related qualification. And that was a staggering number. Stadio have 38,000 learners, and of that 38,000 inside Stadio, 11,000 are doing some form of education-based qualification to become teachers. So think of it logically. If Stadio were just to pick up 10% of Unisa's education learners, they can double their business just by picking up 10% of Unisa, showing you the leverage effect that can actually play into Stadio if they get their model finely tuned and they actually offer a compelling value-based proposition to clients who are currently going to Unisa.
Yeah, it's incredible.
There's one example.
Yeah, incredible. I think the most important factor that investors should also know is that this is a long-term game with them. It's not going to happen overnight. But anyway, so let's get on to the final company that you cover. And it's not one I know personally, so we'd love to learn more about this company, and that is Libstar. What's going on there? You know, what's worth taking note of in that company?